Meta stock down 15% after hours. We got Tesla up 12% today after earnings yesterday. Big tech earnings this week. It's very exciting, a lot of volatility. What is interesting is Meta beat on both bottom and top line. They're getting crushed. Tesla got absolutely destroyed on both top line, bottom line. But it's all about the guidance. No one really gives a shit about the current quarter. That's how stocks work. But I see on every forum, Twitter, people are scratching their heads. But honestly, Tesla's been getting wrecked year to date. They were down 40%. So the bad news is pretty baked into Tesla. Meta really hasn't had too much bad news baked in. If anything, a lot of their AI talk has helped the stock, so their earnings coming out. We'll dive into both of them a little bit more details. If we look at Meta first, honestly, the earnings, like I said, were pretty good. One thing that's making the stock go down a little bit is that they announced that their CapEx spending would go up slightly from an earlier estimate, probably around $3 to $5 billion more in spending related to AI infrastructure. They did the same thing with Metaverse. And anytime you announce, hey, we're going to spend more money than expected, Wall Street doesn't like that. But honestly, outside of that, looking at everything, I think they're making the right long-term moves, investing in AI, continuing to invest in the metaverse. Their margins look pretty good. They have the money to invest, even though it's a setback in the short term in terms of stock price. I'm still a long-term holder of Meta. Not really concerned at all with this price action after running pretty hot for the past year. And if you look at the 5 years, this thing has been absolutely crushing ever since the beginning of 2023. Now, if we look at Tesla, a little bit of a different story. So if you look at their revenues, year over year down 13% for automotive sales. So they're running into a little bit of a hiccup when it comes to the auto industry and how cyclical it is with interest rates being higher, and the demand boom just isn't there. They're dealing with China issues, supply chain issues. So a lot of bad news baked in around their auto sales. Their energy is actually up 7%, which is good to see. And then their service revenue up 25%. We're still able to keep their gross margins around 17.4. Going down here, what is interesting to call out is free cash flow is actually negative 2.5 billion. So they're still sitting on a ton of cash, 27 billion. So it's not like I'm worried Tesla is going to go bankrupt or anything. The reason that Tesla really bounced, in my opinion, earlier this month, I think Reuters came out saying that Tesla was going to abandon their cheaper model, that 25,000 mass market model. In the financials and the press release, Tesla's calling out about increasing the timeline or moving up the timeline of when those cars are going to come out. So Wall Street was thinking that those revenues from cars or lower cost cars were going to go away. But Wall Street definitely thought the focus was purely on autonomy, and they're trying to basically do it all. So Tesla coming out and poo-pooing on Reuters. Tesla also hyped up their AI potential. That's also part of the free cash flow that we saw. The reason it was negative, they invested around $1 billion. Again, Tesla is more of a narrative story. It's whether or not you kind of believe Elon and the vision of the company. It's by no means cheap. The PE is still elevated for a company that's not necessarily growing related to their auto sales. And I own both these stocks in the portfolio. I've been buying Tesla or starting a position more recently, and actually trimmed Meta a little bit a couple months ago. Let me know what you think in the comments below. What you thought of their earnings and which stock of the two that you're buying, or maybe you're just avoiding both of them.